Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 13th. I want to take just a brief minute to discuss what markets did last week as the S&P 500 was down 0.24% or down 24 basis points on the week. The mid-cap index was down an even 1% on the week, and the small caps were down even worse, down 1.2% on the week. And everyone was all looking forward this week to Wednesday's CPI report that we got, and that came out yesterday, and it did come out hotter than expectations. It was for up 0.3 month over month, and we came up 0.5% or 0.5 up. And that sent the overall headline CPI year over year to 3%, and that sent the market down on the initial news, and the sell-off initially happened right at the open. But the market was pretty resilient throughout the day. That has been the remarkable thing that we've seen throughout this, is how resilient this market is. Even faced with a hotter CPI report, which what the implications of that are is that the Federal Reserve Bank is less likely to cut rates now, even more less likely to cut rates. So the indication going into this year was 4 rate cuts. As of December, January got to 2 rate cuts in the back half of this year, and now those are in question because of how hot inflation is. We also don't know the impacts yet of all these tariffs that are being implemented, and if that does cause any inflationary pressures also. Puts the Fed in a very tough position. It's hard for them to cut rates when inflation is being sticky. Now, if you'll recall, at River Place, we did say for about a year now that we thought inflation would be sticky around here as you're deglobalizing, you're doing a lot of these things, you have an aging population, things along those lines that are sticky inflationary items. And so you're seeing that be the case here, where inflation is stuck around these levels. But what do we see moving forward is the big thing that I'd love to talk a little bit about also is what really drives the market overall. These are all macro issues that we talk about, but earnings are what allows the market to really power itself forward. And so we're about halfway through earnings season right now. Most companies who have reported, we have about 80% of companies in the S&P 500 who have reported their earnings are beating estimates, which allows the room for the market to move higher as they're beating, and not only beating but raising estimates, which allows the market to not get any more expensive while it moves a little bit higher. And that's what drives the market, is all of these macro issues impact corporate earnings, right? So inflation rates, things, consumer spending, all of that impacts corporate earnings as a whole. And so that's why you see the macro events move the market the way they do. But what we really see is we do see a volatile market, as we've talked about, but one that has room to move higher in a very, very resilient market. So diversification is always key in a market like this. So if you have questions about how to navigate this market or how to help structure your portfolio, give us a call. We'd love an opportunity to speak to you. You can reach us at 904-346-3460, and you can always check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much.